Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Ramonites. Thank you for joining us this 28th of January 2015, post the blizzard that could have been of 2015. Sorry for the humor, but interesting dynamics here in the Northeast. Lots happening, folks, globally, locally. Earnings, we're in the midst of earnings season. We're in the midst of what seems to be geopolitical wrangling and opinion season, as always. So far, the first month of 2015 has no shortage of drama as we try to get a hint of what the rest of 2015 may be. And so let's dive into some of the data that we are seeing this morning. We have S&P futures at higher by 4.25 points at 2034.25. We have crude oil lower by $1.11 at $45.12, really hugging that $45 level, as we mentioned before. The 10-year at 1.813, the 30-year at 2.388. We have the dollar index higher by 0.153 at 94.175. The euro lower this morning at 1.1357. So clearly we are interesting dynamics taking place, continuation with a lot of the themes that we have been discussing over the last few weeks and into 2015. We'll get into those in just a moment. We're about 9 minutes away from technical analysis with Milton, so we'll jump into that as well. So let's take a look where we were in yesterday's trading day. Keep in mind something. Not everyone was in offices. Not everyone made it into work yesterday with respect to activity because of the storm. So keep in mind that tends to influence volatility, tends to influence level of participation, and so that is something that we want to keep in mind. So yesterday, the Dow Jones clearly all across the down day yesterday. Dow Jones Industrial Average lower by 1.65% at 17,387.21. The S&P 500 was at 2029.55, lower by 1.34%. The Nasdaq lower by 1.89% at 4681.5. So clearly we have a little bit of a rebound in activity this morning, up by about 5 handles, 5 points on the S&P 500 futures. And so that's something that we are monitoring rather. So one of the main things, as you know, we are in the midst of earnings season. Certainly Apple, some blowout numbers here. We'll get into the specifics in that in a bit. From a geopolitical perspective, one of the 3 areas that we're keeping an eye on is certainly the Middle East with respect to certainly the ISIL situation. Certainly if something bubbles up out of that, we'll take a look. Also in the Middle East, certainly with the death of the Saudi king, interesting to hear. You're hearing almost on a daily basis opinions from Saudi Arabia, perhaps influences from Saudi Arabia with respect to OPEC. So that's something that we are keeping an eye on. The other geopolitical locations, certainly we're keeping an eye on. The Russia-Ukrainian situation seems as though activity is picking up a bit, and also in the Eurozone, the Greek implication the Greek election implications. Certainly, it's a negative. Negative tone, if you will, in Greece, and that's something that will continue to monitor. So the themes of the day, as we're preparing for, that's been happening more or less on a day-to-day basis, is this continued euro weakness. We know that it's been exacerbated by two things. One is the cap removal from the Swiss National Bank. Two is the quote-unquote quantitative easing from the ECB that was announced, and two, and certainly the dollar strength is certainly having an impact on that as well. Continued themes also for the days: lower oil weakness, if you will, and that's something that we will continue to monitor. As we take a look at these rates, as we take a look, we've been discussing the rate decrease, the decrease in overall rates, specifically in the U.S. on the 10-year and the 30-year, making a significant impact. A very strong bid, so you have an inverse relationship. So basically, what you're looking at is if there's a strong demand or a strong bid for the Treasury, you'll have a lower yield, right? It's an inverse relationship. And that's something that we'll keep an eye on. Deflation risk every day. We like to listen for commentary with respect to central bankers and their opinion on deflation and how best to deal with it and how markets are dealing with it. Also, certainly the Greek election implication, we discussed this, the Greek equity weakness. We're continuing to see some weakness as well today on the in Greek equities. Also, the Russian economy. We've been mentioning this. It's interesting as the Russian, only sometimes does the news of the Russian economy enter the lexicon or the conversation of certain analysts and central bankers, but folks, it does have an impact on global politics. And certainly we feel that the Russian economy is back in focus, specifically with the ruble, and how Russia will actually deal with the consistently low oil prices. So let's jump into a few minutes of economic activity that we are anticipating today. Baltic Dry Index falls to 688. Lowest level since September 2012. We report on this index on a daily basis, and it's a wonderful way of seeing real, I don't want to say real time, but really day-to-day activity with respect to shipping as it relates to grain and raw materials, activities on the actual what kind of arrangements are being made to ship materials around the world. This morning, certainly at 10:30, we're having the EIA petroleum inventories. 11:30 are the results of the $15 billion 2-year fixed rate note option. 1 o'clock is the results of the $26 billion 2-year note auction. And 2 o'clock, of course, is the FOMC announcement. With respect to the FOMC announcement, we're not expecting anything cataclysmic, but we want to see what kind of tone they take as they comment on the economy. Will they comment on the global economy as it relates to possible slowdowns and globally? So that's something that we are keeping an eye on. That's at 2 p.m. So we're about a couple of minutes away from excuse me, we're a couple of minutes away from our technical analysis session with Milton. Later, we'll also bring in a very distinguished guest to Unusual Activity, Vince Vora from TradingWinds.com. We'll bring them on, bring Vince on in just in a few minutes here. So also, let's jump into what else we're looking at, and specifically on the global side is specifically on the Russia-Ukraine situation. We're keeping an eye on Greece. Remember, rhetoric can be important to how the markets respond to it. So that's something that we want to keep an eye on. And Russia, Ukraine specifically, there's already threats of not threats, there's also indication of other sanctions coming from the West. It's not the fact that sanctions probably will come to be more sanctions, but really how does Russia react to it? How does Russia react to the sanctions and its relationship with other countries vis-a-vis China? So that's something that we are monitoring rather closely. So what we'd like to do now, we'd like to bring Milton. Milton, certainly very interesting day yesterday. We mentioned it was the storm, so that's something that we may want to keep an eye on. But certainly Apple had blowout numbers last night, and certainly strong bid this morning. What's on your mind? What are you seeing? What can we anticipate for today's trading day?
Well, clearly it's Apple. Apple had unbelievable earnings. No one can deny that. Even the Apple haters cannot deny the earnings from Apple were just extreme. You had positive, some positive earnings after hours yesterday, some positive earnings this morning. Futures are currently up about, 5, 6 handles, but you also have to counteract the futures value. So it's up about 10 to 12 points. You have FOMC today. You have in Greece getting slaughtered today. The banking system in Greece is down over 35% since the Syriza party has taken over. Oil down another 2%. It's going to be an interesting day to see how the market reacts to everything that happens today. Your guess is as good as mine, so we'll see what happens throughout the trading session up to 2 p.m. when the FOMC comes out. As of now, it's in many eyes, it's a non-event, so we'll see if anything pops out or if anything different comes out from Yellen and the Fed. Quick numbers on the ES. We're watching to the upside resistance of 2045 to 2050, downside support at 2025 to 28. The volatility is there. Be careful to take your tight trades. The ideal resistance levels, the numbers that we keep always on to watch if they're broken, is ideal resistance about 2065 on the ES to support on the 2000 level on support. Oil, we're at 45.20 pre-market, down about 2%. Very, very large build on the API numbers after hours yesterday. We have in the oil numbers today. I think we're having, right, George? I don't think it's going to be canceled because of the weather.
Yeah, no, we're anticipating 10:30. Okay. Exactly.
So oil numbers are today, and we're watching those levels. We're watching the support, resistance at 45.80, 45 support. The two numbers we're watching, the two big numbers, upside at 51.75, downside at 44.20. That is oil. That's going to be what we're watching on oil side, and keeping an eye on what happens in regards to the numbers that come out at 10:30. Gold is above the 1250 mark. It's in that 1250, 1300 range. We're watching the 1250 support, 1300 resistance to see which way it indicates on a volume break. Keeping a close eye. If we get any idea, we will sure to let everyone know. But as of now, it's in the tradable range, and we're watching very closely. The VIX 1722 is going to be lower this morning. It's in that support levels, 14 to 16 support levels, upside resistance at 2021. It's in the tradable range right now, so we're keeping an eye and see what the volatility index is doing. As of now, it's trading at support levels. Dollar strength this morning is to the upside. Had a little blip yesterday off of those durable goods numbers, but as of now, the continuation is to move to the upside, and right now, pre-market, we're trading up a little bit. We'll see what happens on the when the market's open, but as of now, everything is considered to the upside on the U.S. dollar. And that's basically it. The key thing today is the FOMC. As of now, no one expects any type of huge news, but you never know, so just be careful when the 2 o'clock time comes around. George?
Thank you, Milton. So there you have it, folks. An interesting start to the morning, certainly. Strong numbers from earnings, Apple earnings, certainly. And that's something that we'll watch. What we'd like to do is just go through some of the energy and commodity numbers, and we're very excited to bring Vince in, and so we'll do that in just a few moments. Just want to run through some more numbers just to prepare our listeners for the market. Let's jump into commodities, energy, and raw materials. We have crude oil lower by $1.04 at 45.22. As Milton said, certainly that 45 level is something to look out for. Also that 44.20. A lot of conversations over the last several days with respect to crude, certainly opinions are all over the place with respect to directional, and that's something that we'll continue to monitor. On the distillate side, gasoline at 1.3630, higher by 0.0129. Natural gas at 2.852. Lower by 0.083. We are still below the $3 mark, and then again, the $3 mark tends to be a little bit of a magnet, as we like to call it. Heating oil lower by 0.0293 at 1.6335. Gold still below the 1,300 level, as Milton discussing, lower by $5.60 at $1,287.10. Silver right at that $18 level, lower by 8.4 cents. Platinum lower by $6.30 at $1,258 even. Cocoa lower by $7 even at $27.36. Let's jump into some of the the yield curve. This is something that we've been very interested with, especially recently with respect to U.S. Treasuries. You have the 5-year 1.330, about call it 30 basis points below where we were a few weeks back at the 1.6 level. 10-year 1.808. And the 30-year 2.381, really maintaining that lower, that flatter yield curve over the last month or so, and really compared to about a year ago. So again, interesting, very similar themes as we're going into each trading day, and again, certainly bodes well for those folks that really enjoy volatility. So what we'd like to do, again, we're very happy to bring in Vince Vora from TradingWinds.com. Vince, good morning.
Good morning. How are you?
How are you? Thank you so much for joining us. We've certainly you've been in the business for a very long time, so I would just at the very beginning really like to have you introduce yourself and tell us a little bit about your background and what you're let's start with that a little bit.
Sure. First of all, thank you very much for having me on. A pleasure to be here with all of you. I have been trading for almost 3 decades, and I used to run the floor for one of the largest financial institutions in the world for about 11 years. And then about 15 years ago, I went out on my own, and ever since have been developing strategies and trading systems that we now use here at TradingWinds. I joined TradingWinds about 3 years ago, and I've been the head trader here. And our systems and strategies are based mostly or solely on technical analysis, actually. And we trade with trend and momentum. That's what we focus on. And we are very risk averse. We are very conservative. But our systems have been extremely consistent, so we're very proud of that.
Thanks for that, Vince. A natural question that first pops into my mind When you're taking a look at a market such as this, right? So let's not even get into yet the technical details yet, but from a very macro perspective, you have a lot of moving parts.
Hmm.
How do you approach a market like this? Let's keep it on the kind of a higher level first. How do you approach what kind of thoughts go into your mind when you go into a trading day such as today, for example, when you have a lot of moving parts geopolitically, a lot of macroeconomic activity, you have a lot of currency activity, possibly currency wars. How do you approach a market such as this, and what's your thought on that?
George, there's one thing that I've learned over the years. When there's so much going on like we have today, one of the best things you can do to try to read the market is just to simplify it. In other words, trying to take all these different factors, the geopolitical events out there, all these financial statistics and numbers coming out, it's so difficult to put them all together and come out with a clear signal of where the market's going next. So what I have always found is to simplify things and just go back to the basics that always seem to work in any type of market. And that's what I do to read the markets. I go back to my charts, clear most of the indicators on, look at price action, and just try to read the market that way and try to block out everything else.
No, you mentioned price action, and that speaks to a lot of work that we do on our end, and just we've been in the business for certainly not as long as you have, but we've been in the business about 18 years or so, from anywhere from running desks and to prop trading, and we've spent a decent amount of time working on and really deciphering the right information and how it affects a particular price action and volume specifically. Let me ask you. Let's get into some of the meat and potatoes, if you will, of today. Certainly, we have from a macro perspective, we're looking at futures higher this morning. Do you approach this with a little bit of a trepidation this morning? Certainly we had over the last couple of days we had let's call it a significant snowstorm. Not all the participants were in. What's your thought on this morning coming into this market from a macro perspective first, and then maybe we'll get into some specific securities that you're looking at this morning. What's your thought process coming in on a morning such as this?
I think we're going to continue to see the increased volatility that we have in the last little while. In other words, there's been a lot of back and forth. We've seen some heavy selling followed by some strong buying, and vice versa, back and forth. And I think we can expect more of that today, especially on the heels of the Apple blowout earnings from last night. I think we can get a lift on this. I mean, the snowstorm in the Northeast certainly resulted in lower volumes yesterday, so that dramatic sell-off wasn't as serious, or I didn't at least think so. Didn't worry me as much. So I think once we get some volume back in today, and on the heels of the Apple earnings, I think we will move higher today.
Sure. So, if when you're taking a look at now, let me ask you this. I mean, do you trade clear across the board, equities, derivatives, forex, and futures, commodities, or is there anything that you like to concentrate on a day-to-day type basis?
We do trade across the board. We do trade stocks, futures, forex, and we do a lot of options, but the main thing we focus on, and that I focus on, are equities.
Okay.
Having said that, we had a very nice trade in crude oil recently, and on the equity side, a couple of huge earnings plays for us, both on Netflix and Apple, and it's funny because usually I stay away from earnings completely. But these were specific option strategies that we made our members aware of, and they worked out great. So we're really looking forward to closing out a few of those today on Apple.
Got it, got it. So let me ask you. I mean, specifically on Apple. You know, you mentioned Apple. Is this something that you is this something you've been holding on to for some time? And if you have been, or maybe you haven't, is this a time to buy? Is this a time to maybe take a little bit off the table? What's your thought on that?
No, I mean, we have traded Apple throughout 2014 at certain points where our systems gave us a buy signal, but we are not long term. We're not. We don't usually hold very long. Our trades are about a week and a half to 2 weeks in length on average.
Okay.
So we're out in a fairly quick period. But the option strategies I'm referring to, we actually opened yesterday. Yesterday afternoon. There were butterfly spreads, a few different ones at certain levels of support and resistance that we identified on the Apple chart. And it looks like we're going to be opening the day on Apple right around one of those butterfly spreads. So that should give us quite the boost.
Great. So if I may, if let's jump into a little bit about your strategy when you're taking a look at a particular position to open. What do you look at? You know, give us a little bit of a schematic, if you will, on you know, for example, what made you what was so compelling about, you know, that particular butterfly spread in Apple? What were you looking at? What was going through your head when you were constructing that particular trade?
Sure. That one was a little out of the norm, and I'll get to that in a moment. But whenever we're looking to place a trade, the first thing we do when we pull up a chart is we remove all the indicators off the chart, and we just look at the price bars and check to see if it is a very clean chart. In other words, is it trending nicely in one direction, or is it very choppy, very messy, a lot of back and forth? We tend to stay away from the choppy, messy charts and only prefer to trade the clean charts. Then once we start adding the indicators of our particular systems, we definitely want to identify trend and momentum, specifically momentum in our favor.
Okay.
And we have some specific rules that we wrap around that. But once we know we have trend and momentum, then we're looking for those ideal areas to buy, those buy opportunities, and those are always focused around support and resistance, key levels of support and resistance, and that's how the Apple earnings trade came about yesterday. Again, we tend to stay away from earnings, but sometimes we see opportunities based on specific levels of support and resistance, and we saw this with Netflix as well. Certain areas that we look back and we try to figure out how big of a gap, one way or the other, can that stock take off earnings. And if there are those key areas of support and resistance in those areas, then we're willing to take a very small gamble for the potential of a huge reward in the form of a butterfly spread. We did that with Netflix, and we put on 4 different butterfly spreads. 2 of them expired worthless, but we paid anywhere between 3 and 5 cents for each of those spreads. So to put it in money terms, for 50 contracts, we spent anywhere from $150 to $250 on each of those spreads. So in total, it was less than $1,000 invested.
Right.
Two of them expired worthless, but the others, one of them we cashed out with close to $3,000 profit. The other one was $7,500, just to give you an example.
Got it.
So with the Apple trade, it was the same thing. We identified 3 different strong areas of support and resistance, and again, it looks like we're opening right around one of them.
Yeah, very interesting. So let me ask you, if we can go back to a little bit on the macro side. Do you watch the dollar? Do you watch the euro end?
Yes, we do. We do. We keep an eye on the major things, but what we find is that more often than not, what we have done is really um, uh, the faith we have in our systems. It's just been proven time and time again that regardless of what news announcements are coming out and so on, the basics are the most reliable. And so, whenever there's a time like this where there is so much going on, and it is difficult to read. It is not at all easy to read. With all these events going on, we just tend to fall back and stick to the basics.
Got it. No, I think that's a great way. We believe in that as well. Although we look at quite a bit of macroeconomic and fundamental data, but really we try to remove as much noise. And as we speak, the New York is open at 9:30 on the Eastern Standard Time. One of the things that we try to do is, as you said, really try to remove the noise as much as possible. There's a plethora of news and activity out there, so we agree with you. I think to have that ability to remove the noise, I think it's rather important. If you take a look at, would you mind if we take a look at, for example, the SPX from a technical perspective? Get your feel on that. Do you trade the macro as well, or is it just individual equities?
Yeah, it's really individual equities that we trade most. But
Okay.
For the SPX, I'm just going to bring up my chart and give you some key levels here that I'm looking at. Number one, what I like to do, especially in a time like this, where if you're looking at a daily chart of the SPX, it's really in what I would call a gray zone. It's been in this sideways pattern back and forth that is difficult to read. So what I like to do is go to a higher time frame, and I'm switching to the weekly.
Okay.
And the key levels for me on the weekly are if we can get above the 2064 level, or especially the 2065 level. If we can get above the 2065 level, I really think we're on to new highs and a fresh new up leg in the SPX.
Mm-hmm.
If we though break below 1988, then I think we're in for a more significant correction. So those are the key levels I'm looking at.
Got it. Now, for those folks who are listening, we certainly have a mix of traders, both on the professional, semi-professional, on the retail side, active investors. Are we in a little bit of a churn? Speaking from a macro perspective, certainly even if we just take I don't want to mix in oil in this particular question, but do you feel that we're in a little bit of a range? Or you certainly mentioned specific levels. If we do not reach those levels, are we in a bit of a sideways? Well, I don't want to call it a sideways market. Are we in a little bit of a churn here for the foreseeable future? Your opinion?
I think we are, at least for the near term, and really as another tool to try to understand when or if it is going to break out. One of the other things I do look at is the yen. I do believe the yen is at a point similar to the SPX where it is in that gray zone, and that's what makes this market so difficult to read right now. I think if the yen trades higher, equities are certainly going to pull back, and vice versa. And right now, the yen, it looks like it is trying to break above its recent highs. It just has not been able to do it for the last couple of weeks. So that's another key that I'm looking at or keeping a close eye on is the Japanese yen. But to your question, yes, I think we're in for a bit more of this sideways choppiness for the next little while.
Okay. Let me ask you this, and it's not meant to be a loaded question at all. I mean, as traders, as participants in the marketplace for a long time, one of the main things that we look out for is these events. Even if you're a technical analysis, is there anything that you're looking for as a tell-all on any particular news information or any particular bit of information that would absolutely say boy, I'm getting a little concerned here from a macro perspective. I know we tend to be a little bit of everything. We tend to be macro guys, news guys, technical analysis, data-based options, and so forth. But is there anything out there that you're looking at that would kind of that you feel could roil the markets in that respect? Anything that's on your radar that you're looking for?
You know, there really isn't one specific thing. No. To answer your question, no, there really isn't. There's always, for me, since 9/11,
Okay.
there has always been the thought that should we have anything similar to that happen again, I think it would be devastating for the markets. It
Yeah.
absolutely would. So, with that in mind, you have to think, should something like that happen, how do I protect myself?
Right.
And the only thing, or the one thing that we always come back to is our money management rules that we trade with, and you
And
really
please
need
get
to
into
protect
those.
yourself.
Sure, sure.
So, when it comes to the markets, there's just so much that is out of our control, and which makes most traders very uneasy to begin with. That's the one thing that most traders have a problem with. And so what we try to teach is, if you're using the right money management rules to protect yourself, then you can withstand such an event. Of course, when and if it happens, you will take a bit of a hit, but with the measures we put in place, it won't wipe out your account, and you will have money left there to recover
Right.
from that event. And that's really what it comes down to as a trader. You want to live to trade another day. So, yeah, but that is the one thing that I think could really devastate the markets.
Do you concern yourself at all with as of late, and again, I want to get into your specific, if you will, some thoughts on how to protect yourself, getting into the specifics. But, one of the things that we've noticed is that, at times the sentiment changes with respect to how they're internalizing specific news, right? So, for example, if you take a look at, for example, Ukraine, several months ago, any news on Ukraine and the Russian situation would absolutely send, the markets into into a spin, positive or negative, right? Over time, it seems as though the markets have internalized that event, and unless there's something cataclysmic or catastrophic, God forbid, they've more or less adjusted their algos and position themselves to, hey, listen, if some news comes out of the Ukraine, we're pretty well positioned. So I tend to agree with you there. How are you? So let's say you're building a portfolio out there. You're seeing what are some of the ways, and again, I'm not asking for a kind of a tell-all, if you will, but what are some of the ways that a trader may protect themselves as they're getting into we'll call it a range-bound market. There's an upside, downside type levels, resistance supports. What's your thought on that? How best to protect yourself? Give us some, maybe not examples that you're using now, but in general, some examples that you've used before.
Sure. Well, first of all, events like the Ukraine situation will always be there. Will always happen.
Right.
I see, a 9/11 be much different than an event in Ukraine. And actually,
No doubt.
what we try to teach is an event like Ukraine will present short-term opportunities for us in the market, because it is something that will sway the market one way or the other when it's initially happening. But then, as you said, things kind of get internalized, they settle down, and life goes on with the market. So those short-term events add volatility, add volume, and add opportunity to the markets. Right. Having said that, absolutely, you need to be prepared for those and protect yourself.
Sure.
And what we've always suggested is number one, you need to trade as if you're in that environment all the time, even when there is nothing going on and the markets seem very safe. And you do that by limiting the amount you put into each and every trade. The absolute most we would ever put in one trade is 5% of our portfolio, and if you have a larger account, we always suggest 2.5% or even 2% is plenty to put in one trade. That way you really limit your exposure to what's going on. And the one rule that seems to shock a lot of people that we follow is to never have any more than 50% of your account balance active in the market at any one time. Most people react and say, wow, I'm going to leave half my account just sitting there doing nothing, right? But again, this is number one, to limit risk and reduce your exposure should an event like that happen, especially on 9/11. And then if it does happen, you still have half your account there to employ back in the markets and recover from such an event. So that really is the key. It comes down to the numbers. That's what we found.
Sure. No, I appreciate that. Do you use kind of more macro hedges? Would you take a VIX position? Would you take any more macro? More SPY? Any specifics that you like to at least hedge yourself, Will, on the overall portfolio?
Yeah, well, what we like to do is, there are certain times when the Dow, the S&P, the Nasdaq, they're all trending nicely in one direction, and sure, from an equity perspective, you tend to put on more and more positions, and then you realize that, let's say you have 8 positions in your account, you're probably long 7 of those and short 1. So when you're overexposed to one side, you're adding risk. So what we do is we'll pick an index like the S&P and trade the SPYs and buy puts on the SPY, for example, sure, to sort of hedge ourselves against the long equity positions we have. So that's what we'll do.
Got it. So what we'd like to and maybe have your opinion on as we're coming to the end of our program here is get an idea of certainly the FOMC. I know you're watching technicals and so forth, but do you have an opinion? What is your opinion on rates, the rate environment? I know you're watching a huge amount of information, huge amounts of indicators. Anything with respect to rates and FOMC, what are you anticipating for the rest of it? I know, again, it's not meant to be a loaded question, and again, we'd love to have you back on again. Sure. Certainly a wealth of information. What's your opinion on the rest of 2000 for rates in terms of FOMC, central bank type activity? Any thoughts on that?
For the last couple of years, actually, my thoughts have been that there's no way the FOMC can raise rates. I've been surprised all along at the language in their announcements and the fact that they were targeting mid-2015 for a rate hike. I honestly always said I thought that would be a mistake if they did that. And right now with the moves from some of the other banks around the world, just this past week reducing rates, I think any rate hike at a minimum will be pushed off to early 2016. Those are my thoughts.
Yeah, no, Vince, it's actually refreshing to hear that. Candidly, we both Milton and I have, when we talk offline and really think things through a bit on where the economy is and where global growth is. Speaking pure macroeconomically, we tend to agree with you. I mean, there's really very little evidence to really get a reason that the FOMC should really find any reason to raise rates, and we tend to agree with you. And again, that's rather refreshing, specifically with respect to rates, and that is, it's to us it feels like they want to be behind the curve a bit. They want to see labor rates increase and push into that 2% target rate, target inflation rate, and we're just not seeing that, frankly. Certainly with oil being so low, but we tend to agree with you. And again, it's rather refreshing to hear you say that. We're not negative on the we don't want to be naysayers here, but again, very interesting thought process about that FOMC. Thank you.
Yeah, you're welcome.
Can we have your opinion on oil in terms of from a technical perspective, and anything else that in terms of perhaps a geopolitical perspective on oil? What are you hearing on oil? What are your folks kind of analysis on where we could go on West Texas Intermediate crude specifically?
Sure. From a fundamental and geopolitical side, I'm very, very surprised that it's gotten this low.
Okay.
I never thought I'd see it, at least not this quickly. But from a technical perspective, from when it was in the $60 range or so, we had a near-term target of 47 on it.
Okay.
And it not only hit it, it exceeded that. And I think now the technical picture on oil is if we break below the 44 level on oil, I think we will quickly see a $40 target hit on oil. Whether we go beyond that, again, I'd be a little surprised. But we currently do have a short position on oil, and we are targeting that 40 level should 44 give way.
Got it. Are you at all? Do you think we're going to be in this range for quite some time to come on West Texas Intermediate? And are you, are you anticipating maybe a little bit of getting a little bit of lift, or are you thinking that we'll be here for, let's say it doesn't go below that 44 level?
Mm-hmm.
We like to think of the caveats as well. Could we see a little bit of a tick up in oil?
Yeah, I do think so. I do think so. Although I don't think it'll be a very drastic bounce or a very quick bounce. I do think we'll be in a range, somewhere, I would say, between the 40 and 60 mark for a while. I don't think it'll be a dramatic recovery. I don't see that happening. And I do also think that should we go down to the 40 and even a bit lower, I think then that range is extended even further out, and I think we'll see lower prices for quite some time on oil.
And so would it be fair to say, Vince, that again, you unless you're seeing a shift in perception, not a buyer yet of West Texas Intermediate, unless you have some more data that can be compelling enough that you would start nibbling here.
Right. I mean, really, again, I focus on the technicals, and from a technical perspective, I would really start taking a close look at it at that $40 level from a buy side. And should it get even lower than that, I mean, I'd love to pick some up at 30. Absolutely. Will we get down there? Hard to say, but I'd certainly like to start nibbling at it at the $40 level.
Great. No, fair. That's a fair assumption. Vince, we really enjoy having you on. Would you be? We'd love to have you on again. Would that be okay with you?
Oh, that'd be fantastic. Again, thanks for having me on today. I enjoyed it, and I'd love to join you again.
Absolutely. So, any as we'll certainly wrap up in a few minutes. But any last comments as we're getting into the markets? We have positive futures currently by just about 3 handles, currently at 20.33. Crude is still down $1.45.16. We're in that proverbial churn a bit. Any last suggestions, at least for today, for those folks that are listening?
Yeah, I think we will, or I'm expecting more upside, or the higher likelihood of an upside today. But
Okay.
I think this volatility, this environment of increased volatility that we're in, we're not out of the woods yet. This is going to continue for a little while. So you really do need to protect yourself. One of the things we've been telling our members lately is to scale back on your size. In other words, if you're usually going to buy 10 contracts of a call option, consider doing 5 or even 3 in this environment, and wait for a more stable or a clearer trend in the indices, the Dow, the S&P, the Nasdaq, the Russell, etc. Right now, we are in what we call a gray zone, so it's appeared to be cautious rather than aggressive right now. That's our belief.
Understood. No, that's a great comment. When you come back, we'd love for you to talk about a little bit more how to properly protect your portfolio with the use of derivatives. We watch equity derivatives quite a bit, and we'd love to have your thoughts on that, and how to really complement your portfolio with the right protection. So I think you certainly bring a lot of experience and a lot of know-how and a lot of color into the equation. So that's really great. So Vince, you are with TradingWinds.com. Your Twitter handle is TradingWinds. And you can also find Vince Vora at in the financial news in the educators section. So Vince, thank you so much for joining us. It has been an absolute pleasure, and we hope to have you on soon.
Great. Again, thank you so much for having me on. I'd love to join you again.
Wonderful, Vince. Have a wonderful day, and as we say, good hunting. And we'll talk to you soon.
Excellent. Thanks again. Bye-bye.
Thanks, Vince. And folks, thanks for listening to Unusual Activity. This has been George Avedon and Milton Marmonides, along with Vince Vora from TradingWinds.com. We wish you a great day and good hunting. Thank you for listening.